Everyone, welcome back to Yuri's Box. In this video I'm going to talk about the yen. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So just to recap, I started making videos the week of February 10th, right here. Actually, about 2 months ago, really. It was the week of the day of the CPI release in the US, right here. It was Wednesday 12th. And ever since then, I put really three things I've been speaking about, three things that have been bugging the market. And those three things are, in my opinion, number one, tariffs, and we all witnessed the drama as it unfolded. Number two would be, some degree of fiscal tightening. We just got an extension of the federal hiring freeze until July, as well as other smaller things that continue to manifest and drive home the fact that we're just beginning to see some small hints, the beginning of a fiscal tightening. We'll see how long that lasts. But third on the list is the yen carry trade. Now, as far as the yen is concerned, in my opinion, we are at a potentially decision point for the yen. Because, well, back here when I started making videos, my expectation was that we were actually going to see the yen continue to strengthen. And the idea behind that were, well, really two things. On the US side, on the dollar side, my expectation was that as we went through the year, inflation in the US would cool. So we would come out of this bump, as I call it, that lasted from September to January, which was fueled by port strike fears, natural disasters, tariff front-running, and the holiday season. And we would come out of that, and we would see disinflation, so a return to the previous trend, so lower inflation. And actually, as we move towards the summer, I was expecting, basically, again, a return to something that is more similar to what we saw last summer, meaning potential worries about growth rather than inflation. And really kind of the summary of the summary would be that I was expecting that as we slowly move towards the summer, switch on the weekly, we would see initial jobless claims slowly drift higher, all right? That, on the US side of things, would push the yen to strengthen. So growth concerns would lead to a stronger yen. And why would that be? If you haven't followed the channel before, we can look at interest rates, and just look at, the benchmark, where, what the central banks are doing. And what has been driving the yen to weaken against the dollar has been really the fact that we have had such a huge spread between what the US central bank has placed interest rates, meaning that currently we're still at 4.5% for the time being. And for a very, very long time, Japanese interest rates were sub 1%. And they've been drifting higher. Now, just looking at the US side of things, slower growth. What does slower growth mean? It simply means that rates will have to come lower. They will have to come down. And they will have to converge, maybe not as low as 50 basis points, but they will have to get closer to the current level of interest rates set by the Bank of Japan, which will lead the yen to strengthen against that. Because again, if you no longer have that big gap, that huge spread between the two, you no longer have a reason for the yen to be so weak against the dollar. So that is the US side of things. What has been driving potentially the yen to strengthen against the dollar? Well, the short answer, and I think the best answer, would be inflation. Japan has gone through more or less what we went through, all right, albeit not as bad. Meaning, if you look at 2022, for example, inflation in Japan was not at 9%, but still it helped kind of just get it out of this kind of just flat inflation way. I mean, basically no inflation, or really battling with deflation for a very, very long time. But just staying focused on recent times, inflation has been a problem, especially because if you look at what inflation has done, as of late, really, with in the US. Where do I have it? Oh, let's pop it up like right here. If you look, inflation, while it has been, not doing much ever since September, was basically back at square one. In Japan, really ever since September, where inflation, or at least headline inflation, was at 3%, on really 2 days ago, we got the read for March, and it came out at 3.6%, meaning that Japan is now facing potentially, having to fight inflation, meaning that on the Japanese side, as far as the Bank of Japan is concerned, interest rates will likely have to go higher. So these are really the two tailwinds that are contributing to a stronger yen. You have, I would say, growth concerns, still not recessionary fears, but growth concerns on the US side, meaning that rates would likely have to come lower, even in the face of, again, declining inflation. And on the Japanese side of the equation, you have inflation going up, meaning that you basically have this kind of a mechanic. I'll just draw it out to you. US interest rates going down, Japanese rates going higher. As these narrow, the yen gains steam and it strengthens. Now, why do I say it is a kind of at a decision point? Because we have actually made again on the weekly, we have made a new low compared to last week. And if you look, I mean, this has been, it hasn't been as dramatic as it was, say, in July of 2024. Because in 2024, this move came in a matter of, a month. We went from a 161 to basically 141, a 12% decline in 28 days. Right here, from January 6th, it has taken us 100 days to have more or less the same rally in the yen. It has been a slow but consistent grind for the yen. And the next 2 weeks, in my opinion, will tell us whether we just make new lows, meaning new highs in the yen, or that if basically potentially we just see a small sell-off in the yen. And what am I referring to? I'm referring to the fact that next week, on the US side of the equation, we have, where are they? Keep losing them. Here they are. We have the S&P PMI reports. And this would be checkpoint number 1, all right? Checkpoint number 2 is in 2 weeks' time, we have the non-farm payroll report in the US. And I think that these two will tell us where the yen is going, and will actually tell us if the yen is destined to make new highs, so new lows on the US pair, right here. Because just focusing on the S&P PMI reports, I keep losing them. Oh, that's why. Here we are. Current estimates for trading economics, and these usually aren't that accurate. But for the time being, trading economics is expecting basically lower prints. But I'm not so concerned with the headline numbers. I'm more concerned of what is actually in the reports. And this is just an example. What I've spoken about in my previous videos about the PMI reports. If you actually read the reports from February onwards, nothing's really changed. All right. The only thing that we saw in March was a pickup compared to February, right? And there were speculations for the weather or whatever. A lot of things that occurred in February dissipated, and now March came along and it was better than February. But if you actually go and read what the sentiment is, it is still more of the same. All right. We haven't still seen really a turnaround, a pickup. We continue to see new orders falter, backlog orders, still in the dumps, employment still kind of weak. And if we were to see the PMIs really go lower, that would be the first indication that potentially the non-farm payroll report could be on the weak side. So that is why I think that the first checkpoint is next week with the PMI reports on Wednesday. And again, if we were to see the PMIs print and really just stay there, and the reports continue to point towards a weakening in the US economy, that would add fuel to the yen, potentially pushing it below the 140 kind of support level, which is kind of really the line in the sand so far. We haven't really gone below 140, and that would be an interesting couple of weeks if we saw the yen go below 140. And again, in 2 weeks' time, we get the non-farm payroll report. If in 2 weeks' time, and granted, a lot of people have been waiting it, I've been, expecting weakness. I'm definitely on the bearish side of the US economy. I make no, I don't pretend to hide that. But if we actually do get something like a sub 100 print on non-farm payrolls in 2 weeks' time, that would just be even more fuel for the yen. And I think that could exacerbate some of the mechanics that we saw play out last summer, where we had an unwind of the carry trade. Potentially, we might see, who knows, maybe the start of the second leg of that if we actually see growth fears and concerns continue to build up. And on the US side and on the Japanese side, perhaps you see inflation continues to be sticky. So I'll leave it short. I would pay attention to the yen in the next 2 weeks, because again, we have as on the Japan side, we have had inflation come in, still at highs. And on the US side, all we can do is wait, and I'll be here to go through the PMI reports as they come out next Wednesday, to really try and see, what our business is thinking of, how our business is thinking about the economy. And again, if we continue to see weakness, that could definitely be a significant tailwind for further yen strength. So keep an eye on US economic data in the next 2 weeks. If you like this kind of content, consider leaving a like, and I'll see you next time. Bye.